from Tennessee is recognized.
Thank you, Mr. Chairman. And Chairman Powell, good to see you again. I'd like to start with something that has troubled me since our hearing yesterday regarding the Basel III endgame proposal that's coming forward by Vice Chair Barr. The proposal is going to have far-reaching ramifications, I think. It's rumored to have over 1,000 pages in it. Yet when I asked Governor Cook about the proposal yesterday, she told me she hadn't seen it, has not reviewed it. And my understanding is that the agencies, including the Fed, are due to vote on this on the 18th of July. And given the fact, and I think Senator Warner described it aptly yesterday, the potential for a perfect storm here, if the rumors that we're hearing about capital requirement increases that may be proposed are true, this may come at a time, banks may be preparing for a capital increase at a time when we absolutely need banks to be lending, not constraining lending by raising capital requirements. So I think there are numerous analyses, the impacts on the small business community, on the banking system need to be taken into account. And I'm very concerned, particularly in light of Governor Cook's response that she had not reviewed it, hasn't seen it, and didn't seem to have any perspective on it at this point in time. It's a very short window to undertake a decision on something as complex as we may be talking about with over 1,000 pages in this report. So my question of you is, how will this process be managed at the Fed in terms of the decision-making and the analyses that need to take place?
So I'll make sure that governors have enough time to carefully evaluate this. So staff has been briefing governors, for the past few weeks about what. But the proposal is still evolving, though. You're still. I mean, I'm hearing even as recently as this morning, things are moving still. So it's not possible when you say we haven't seen it. We have not seen a final proposal. There isn't something to send to the committee, and I think. You can be briefed on the current state of where things are, and I have been in detail. But ultimately, when you sit down to read this large document, I'm going to wait for the final version to really do that. But you're right to point to the need for time to evaluate it.
Yeah, Governor Cook's response to me as she deflected yesterday just left me with a great concern. So I appreciate it. I just see no need to rush here given the significance of what's happening. And frankly, the other concerns you and I have discussed in terms of where we are today, I think it warrants very deep consideration. I'd like to turn to another item that you and I have also discussed in the past, Mr. Chairman, and that has to do with bank mergers. And if you think about a potential bank that's in distress, all things being equal, would we be better off for that bank, that distressed bank, to undertake a merger or acquisition, or would we be better off to let it enter into receivership?
The former.
Certainly, I agree with you. Yet we also, in the case of First Republic Bank, it was like a slow-moving train. Stock price had collapsed. There were actually, in my understanding, 11 different financial institutions that put forward proposals that would have, been a rescue package for the bank. Yet none went far enough to achieve an actual merger or an acquisition in that place. In fact, they let it go into receivership. And, my concern is that this administration has created such a negative environment for consolidations that it's a real issue. My question of you is, do you think the current state we are, should we allow more banks to merge, especially given the stress that we're seeing in the system?
So I think there was every chance given for and much hope bestowed on the idea of having that bank sold before it went into receivership. It just they couldn't make it happen, and that's unfortunate. Everyone would have loved to see that outcome rather than a receivership. No one wanted that to be the case.
I'm certainly in that camp as well. My view is that there's an environment right now of uncertainty as the banking community looks at mergers and acquisitions in the guidance that the White House has given about very negative in terms of mergers and acquisitions against consolidations. I think that institutions are very reticent to move forward, and that's why I've introduced the Depositor Protection Act, which, among its many provisions, is going to provide a green light to well-capitalized, well-rated banks to merge with institutions that are under distress without having regulatory interference. And so as the committee moves forward, I hope that we're going to have opportunity to work on this legislation. I hope we can remove needless regulatory hurdles, and I hope we can actually encourage mergers and acquisitions that will protect taxpayers. One final point I'd like to raise with you, Mr. Chair. It's something that you identified nearly a decade ago. At that point in time, the Fed created a reverse repurchase facility that was intended to be a tool that would put a floor on interest rates. The facility was targeted at investment vehicles like money market funds, which actually play a significant role in the short-term funding markets. At that time, you joined others in the board in expressing concern about the possible unintended consequences of this facility, particularly in times of market stress. That's where this facility could actually exacerbate the so-called flight to safety. Since that time, this facility has grown to over $2 trillion worth of overnight deposits at the Fed. So I'd love for you to walk us through, if you might, the potential risks that this facility might pose, and take us through how it relates to basically pulling deposits out of the banking system at a time when we'd like to retain those deposits.
So the reverse repo facility really hasn't increased. In fact, it's shrunk in size since the events of March. So it's really not on net accounting for the decline in deposits. Really what's happening there is that market rates are higher than deposit rates, and depositors are moving their money. This happens in every cycle. I think I raised.
May I interrupt for just a moment,
please,
Mr. Chairman? So, are my numbers incorrect that we now have $2 trillion that are parked in this facility by money market?
We had $2.5 trillion before March, so it's come down in size. In fact, now that Treasury is refilling now that the debt ceiling is solved and they're refilling the Treasury General account, the reverse repo facility has been declining, and that's what we would have hoped to see, rather than taking reserves out of the system.
Still seems
Thank you, Senator
significant.
Hagerty. Senator Warner's recognized.
Well, thank you, Mr. Chairman.